Hey guys, welcome to Stock Talk. Today, we're going to talk about Dropbox, an online cloud-based file sharing site which went public in 2018 following a string of user privacy concerns, and which has had an incredibly successful year so far. In this video, we're going to talk Dropbox, or as it's known by its stock ticker, DBX, what they do and what sets them apart, some of the controversies besetting the company, and some of the things they're doing right from a financial standpoint. Finally, we'll discuss what we think about DBX as an investment and why it's a buy or a sell. We see that most of you are not subscribed yet. Subscribe, since it helps with the YouTube algorithm. You can always unsub later. Also, favor yourself by hitting that bell to get reminded when we have a new video. Now let's get into it. Dropbox was founded in 2007 and quickly became one of the premier file hosting services on the web, and one of the largest companies in the world. Remember to hit that like button and make sure it turns blue. However, as is the case with many large tech companies like Dropbox, being so huge and having so many users invites quite a lot of scrutiny. Specifically, it invites scrutiny into your privacy policy, and concerns about the security of user data might begin to pop up, and that happened with Dropbox. In fact, in 2011, 12, 13, 14, 16, and 18, there were public controversies involving Dropbox and its privacy policies, sometimes multiple times a year. Perhaps it's for that reason that it took until 2018 for Dropbox to go public, despite it being one of the largest tech companies in the world long before that. Despite the fact that it took Dropbox years to make its way to an IPO, once it did, it was almost immediately hailed by investors as a stock worth having. In fact, a series of things happened in early 2021 that rocked Dropbox stock like a hurricane. First, in February of 2021, a group of 16 current and former Dropbox employees told VentureBeat that they were victims of gender discrimination, alleging examples such as changing standards for promotions, unequal compensation, being set back in their careers after maternity leave, and experiencing retribution when they take their cases to HR. The group also claimed that harassment was commonplace, and even that employees were demoted after filing a complaint with Dropbox HR or returning to work following maternity leave. This revelation did seem to have an immediate impact on share price, as the week after the article came out, DBX shares saw an 8% dip. Nevertheless, DBX rallied fairly quickly. Right after the dip, article after article came out talking about what a great deal DBX was at its current price, spurred on by the fact that Dropbox posted earnings for Q4 of 2020 that were better than expected. A bunch of articles came out letting investors know that all of Dropbox's controversies, as well as the fact that in general all tech stocks were down in February of 2021 due to the continued impact of the COVID-19 pandemic, caused DBX to drop low enough in value that it was now almost certainly worth the cost to buy it. Articles like earnings estimates moving higher for Dropbox, time to buy by Yahoo Finance, and more seem to have had quite an impact. After all, since the end of February, Dropbox is up around 25% in less than a month. Guys, I know that's not as crazy as some of the stock movements we've talked about on this channel, but compared to how 99% of stocks out there move, especially gigantic stock with a lot of trading volume like DBX, being up 25% in less than a month is absolutely nuts. While most of this increase is definitely indicative of the fact that investors took heed and are beginning to realize the true value of Dropbox stock, it isn't entirely retail investor driven. In fact, $2.46 million of DBX shares were recently bought by one of the company's directors, Robert Mylod. While this does certainly damper the narrative that the floodgate of investors opened and they're storming the stock exchanges to buy Dropbox, it's important to remember that institutional and insider ownership, even when that ownership is on the part of one of the directors of the very company in question, is a very good thing for investor confidence in a stock. After all, if Robert Mylod, one of the directors of Dropbox, is so confident in the future of his company that he's willing to buy millions of dollars worth of their stock, that sends a very strong message to the investor community. And it isn't all hype and positive sentiment that's driving this DBX rocket ship. Dropbox has made some announcements that are only going to serve to further fuel the flame. Recently, for example, Dropbox announced that it intends to buy DocSend in an all-cash deal worth $165 million. DocSend is a sharing platform much like Dropbox, but one focused specifically on documents, and specifically on documents having to do with fundraising and potential business partnerships. This is an interesting acquisition for Dropbox, and it implies that Dropbox might add features geared towards specific types of users like that to its service in addition to general file sharing. In addition to DocSend, Dropbox also bought HelloSign, a legally binding electronic signature that is now a usable feature on Dropbox. In fact, both of these acquisitions seem to be part of a larger trend within Dropbox to make the service more user-friendly and give users the option to perform more specific task-oriented tasks. Other innovations from the fine folks at Dropbox include Dropbox Vault, Dropbox Passwords, Backup, and Dropbox Spaces, and it's expected that all of those features will have increased revenue for Dropbox since their launch. So, as always, our last question is, where does that leave Dropbox today? Well guys, I think Dropbox is definitely a buy. Sure, the stock has seen a rally recently and it's trading at a bit of a premium relative to its usual price, but it's also adding so much value to its service that it's hard to see how that buffed up stock price isn't justified. Between Dropbox's acquisitions and its new features, not to mention the fact that as more people return to work now that the vaccine is out and the COVID-19 pandemic is finally looking like it's on its last leg, Dropbox will have an influx of new users that will also help pump up its share price. Dropbox is only trading, as of writing this video, around $27, which makes it a very affordable stock to buy for anybody who's looking to get into a tech company with a real future, and whose stock price isn't as inflated as something like an Amazon stock or an Apple stock. Dropbox is at $27 now, but by the time the pandemic is over and people are back at work, I wouldn't be surprised if Dropbox is in the 30s or maybe even the 40s. And if Dropbox successfully continues its current hot streak of purchases and product innovations, I could see it going even higher. So guys, that was the brief overview of where DBX currently stands in the market. I personally think Dropbox is a bull despite some recent controversies, just because they're so good at innovating and at making acquisitions for the right reasons. But what do you guys think? Is DBX a bull or a bear? Let me know what you think in the comments down below. If you like what you saw, remember to smash that like button, and subscribe, and turn on notifications so you don't miss more videos. And I'll see you guys in the next one.